Recording is on. So will be recording this. It's Wednesday, August 24th, and it is our first Wednesday review session for MBA 700. And so the first question was about the homework. And as you know, you saw my email from yesterday about thank you for the rapid pace that you completed the discussions. Over half of you did complete them as of yesterday, even before they were due. Some of the discussions are due Thursday night and some are due Friday night as far as discussion points. As far as the homework, yes, we're using My Business Course, a third-party platform, but we do, and the initial announcement said it was not linked to Blackboard. We were going for weeks trying to get it connected. We finally did get it connected, so we don't have to worry. So you can go directly through Blackboard to get it. I think, Chris, you had a question about the actual homework, and for some reason you weren't able to find the full assignment. I know a number of you have completed the assignment as well. So did anybody else have problems accessing it? Because when you went in, there were a series of questions and answers. Ideally, you're going to want to complete the homework before the night it's due. The homework does turn into a pumpkin, which means if it's due Saturday night or Sunday night, and typically it'll do Sunday night, you try to do it on Monday, it's going to be closed. If there are exceptions, if you bump into something, I obviously can undo that and I can make exceptions, but really do want to make sure you're on track. So I'm going to urge you and encourage you to get her done early. That's what you really want to take advantage of, get it out of the way, plan for challenges or problems, and possibly conversations with me if you have any questions. But let me get back to the original question of, so Chris isn't able to find all the questions because there are multiple questions that were assigned for the homework one. That's due on the 28th, I believe, due on Sunday. Did anybody else have problems looking at them? There was an initial glitch that you only had one access and then you got out of it and you couldn't do anything with it. So that's been corrected as well. But you basically have unlimited attempts prior to 11:59 p.m. Not 11:59 and 30 seconds. 11:59, it's going to one fell swoop. It's supposed to automatically take you where you're at the time. And homework is a bunch of part of the grade too. So you obviously want to do well. I want you to do well. So anything we can do to help you do well. Chris, if you're still having problems after this, let's get together and we'll do it. We'll share a screen and we'll do a walkthrough and take a look and see if we can make sure we're on the same page.
Okay. Yes, sir. Thank you.
No, thank you for asking the question. But did anybody, again, back to the question, did anybody else have problems getting into the homework, accessing it, completing it, working it through? And there may be technical glitches as we go through the semester. There may be some assignments I forget to expose and unhide, and that'll be on me. And if you do need an extension, we're all working hard. If something happens and you know what, family issues on Saturday and Sunday, you were going to thought you get it done and you need till Tuesday, just let me know. This is not life and death, but the goal is to keep to the calendar, to keep on track, because I really don't want you falling behind. Once you start falling behind, the snowball starts rolling. And being from Boston and Wisconsin, I can talk about snowballs. But as a snowball rolls, we're not going to want to fall further behind. So that's where we want to be. I'll open up the floor. I'll keep the line for questions open, and then I'll do a lesson tonight, and we're going to go into Edgar, and we're going to play a little bit. And I've got a poll question for you as well. Any other thoughts, concerns, issues that come to mind?
Dr. Scott?
Yes.
Can you talk about discussion 2? Like, I read it as like follow-up after our first meeting. So can you talk about discussion 2 that is on there?
Actually, I'm going to go ahead and share screen. Let's go over to Blackboard. And let me see if I can find it first and make sure Blackboard's open. Get over there. So we'll go into it together. Let's go into. I'll load it up so you don't have to see me loading it. And we'll take a look at that. And the second discussion point does not need response. So when we go in, I'll share screen now. Sign in successfully. So when we go in and into 700, you've all seen this before, I hope. No surprises is the motto. And we go down to discussions. And again, I wanted to make sure you had discussion, the first discussion done. That's the intro. So you know your classmates for Saturday. You get to have that conversation. So we go down to discussion point 2. And there is a Simon Sinek video. Have any of you seen it before? Is that Simon Sinek is kind of a guru when it comes to your why. And these are more, you can do this at any time. This is not, you don't have to wait till Saturday to do it. Okay. And then there's a quiz, comment, PRARS.com requesting annual reports. All of this can be done at any time. Again, I wanted to make sure discussion 1 was out of the way. Discussion 2, I'll release discussion 3 in the next 48 hours as well. But as far as waiting to Saturday, you do not need to wait to Saturday to cover that. Does that make sense?
Yes. One question I had about the annual reports. I went through the syllabus and you say that one needs to be Kellogg's and the other 3 companies, and we'll be presenting an analysis of it at the end for our second project.
Right. The
So
project, go ahead. I'm sorry.
I'm sorry, you go ahead.
Please.
Okay, so my question was that the rubric mentions that we have to request companies that we have some idea of or industry that we belong to, right? So can you give an overview of that?
Sure. The initial request for annual reports, I want you to have some hard copies in your hand. These are going to turn into pumpkins. They're going to be collector's items because they're all going to be online. You're never going to have a hard copy again of an annual report. So when you go into PRARS to request those, most of them are electronic too. So besides Kellogg, I do want you to get some hard copies. Those don't have to be the ones you use for your project.
Oh, okay. That was my main question. Yeah.
Ultimately, we're going to be using Edgar, which
Mhm,
has all publicly traded companies
mhm.
access to their, from the SEC, Security Exchange Commission, all 10Ks, all annual reports. We're going to use those, and that's going to be your data analysis. As a matter of fact, you're going to have to go to 2 10Ks,
Mhm.
some of the analysis to get some prior year stuff. Balance sheets
Okay.
for 2 years, income statements are 3, and sometimes you need a
Mhm.
third year balance sheet data.
Yeah.
Calculations. So, but preliminarily, explore some things you might have an interest in. I mean,
Mhm.
maybe you want to know about Sunoco, publicly traded, they're local. Maybe you want to know about Amazon, maybe whatever the companies are that have annual hard copy reports, great. When you actually do your project, you don't have to use those reports as your project.
Okay. Because yeah, that was my question, that if we are requesting reports, are we doing analysis on the same reports, or we can do it for the company that we like? Yeah.
Perfect.
Okay. Thank you so much.
You're very welcome. Great questions. Appreciate the input and the asking. Other questions coming to mind?
Dr. Scott, quick question. Can you release a schedule when we will potentially have like quizzes and exams, and which chapters will be covered?
Sure. You know what? I don't think I put that on the calendar. Well, some of it might be on the calendar in the syllabus, but I will go ahead and go through that. Basically, you have a quiz on every chapter. And then you'll have exams that'll be 4 or 5 chapter exams grouped together.
I'm sorry, you broke up. You said there's a quiz for every chapter?
There is a quiz for every chapter, and then there'll be 4 or 5 exams, 3 to 4 exams that include 4 to 6 chapters each throughout the semester. So, and we'll talk more about using respondents. How many, quick show of hands, how many of you used respondents before? Anybody? Oh, good. Okay. So some good experience. There's 2 levels of respondents. My business course respondents is not the video, and the quizzes won't be videoed, but the exams will be, as well as the exam when we get for our last class. And we are meeting, we have the October meeting, we have the last class meeting, we have the first class meetings coming weekend. But the quizzes, and I'd say the quizzes will be for every chapter. Those will ultimately be the following Tuesday after the homeworks are due on Sunday, discussions are usually Friday or Sunday, and then the quizzes are due that Tuesday. to give you a chance to finish the homework, to finish the assignments, to feel comfortable. And you have questions for me, or you want to have a chat, we can do that. Is that, Jesse, does that answer your question?
Yes, sir, it does. And for the Tuesday quizzes, is it a window from that Sunday to Tuesday, or is it open and closes Tuesday?
It'll close Tuesday like all the homeworks do, but it'll open up prior to that. So you will have at least
Okay.
Sunday, Tuesday, if not more. That's a fair question. All right, other comments or questions? Then I'll do a little deeper dive. I'm going to do a quick poll, but this is an accounting poll question that I'm going to ask of you. So I'm going to have you vote. And this could be a Walmart poll. So the Walmart poll is asking, you have a $2 a gallon of milk you buy at Walmart. How much do they put in their pocket? How much do they keep? Give you a couple of minutes. I'll give you a minute and a half to respond. What do they keep from the sale of a $2 gallon of milk? 75 cents or more, quarter to 75, nickel to a quarter, or less than a nickel. Well, I got a pretty good distribution. No one said choice 5 yet, so that's good. All right, so, all right, so we've got 17 votes. Looks like everybody has an opinion. I'm going to go ahead and up to 19 votes. Good, even better. All right, so let's go ahead. I'm going to end the poll and share the results. So keep this in mind. We had, majority of you said between a quarter and 75 cents. Some of you were saying 75 cents. We're going to keep it all. Nickel to a quarter is 26%. The lowest response is less than a nickel. Okay, 2 responses. Well, we're going to answer that question together. So I know the suspense is building, and I know you can't hold it back, but we're going to go ahead, and I will say the minority opinion is the correct one. So, but we're going to see what that means. By the way, actually, whenever I teach a class, an answer in 2 words is probably the most typical answer you can give that will be correct in any question I ask. Does anybody know what those 2 words might be?
It depends.
It depends. Thank you. Well said. It depends. Now, you can't put that answer on an exam. You do need to come up with a definitive answer. But my follow-up question when I say, okay, it depends. Great answer. Perfect. That's what it is. It does depend. The follow-up is going to be, it depends on what? And I will say the answer to this poll could have a couple of answers. It depends. And as when I say it depends on what, are we depending on a gross profit or a net profit? We'll talk more about that. Are we talking about this year, last year, or the year before? And the answer will change. So I could have been a little bit more detailed and get, kind of narrow it down, hone it down to a single answer. But we're going to walk through the process because we're going to play with Edgar this weekend, and we're going to ask some similar questions. Quick show of hands. How many feel some comfort with an income statement? Income statement kind of makes sense. I get revenue, I subtract expenses, I get net income. Looks good. How about a balance sheet? Accounting equation, assets equals liability plus equity. Show of hands. How many are uncomfortable with those terms? And show of hands there. Okay, that's fair. That's why you're in the class. So no harm, no foul. And you will be comfortable by the time you get out of this class, without a doubt. We'll get you there. So I'm going to go ahead and share screen, and I'm going to walk through the use of Edgar. Have any of you used Edgar before? Okay, 1, I see 2 hands. I can't see if you can raise your hand because I don't see pictures on some. Okay, 3 hands, thank you, previous. All right, so we're going to go ahead and we're going to go into Edgar. Now, what Edgar is an SEC website. It happens to have annual reports, also known as the 10-K, for all publicly traded US companies. which is why we use it. Why we use it for your project, for your reports, because you all have access. If you say, you know what, SC Johnson, I want to do a report on SC Johnson. Well, they're privately held. So is Kohler for that matter. They're big companies, but they're privately held. But if you want to do an Amazon or Microsoft or Electronic Arts, they're all publicly traded. Then you say, I want to do Puma. And that's perfect, except they're not an American company. They're not going to be on the SEC's website, but you still can because ratios are ratios, whether it's in euros, yen, dollars, whatever it might be, British pounds. But we're going to go in and I'm going to go into Walmart on Edgar through the SEC and give you a walkthrough on how we do that. So I'm going to go ahead and share my screen. And I'm going to go over, we just came from Blackboard. I'm going to go in and just do a quick Google search on Edgar, Eggar. And when I'm doing a Google search, there it is, Edgar, www.sec.gov, search Edgar, company search. I'm going to just click on that because I'm going to do a company search. Company filings. I can enter a ticker symbol. And anybody know what the ticker symbol for Walmart is? I think it's WMT. Well, I'm going to just type in Walmart. I'm going to do a search. There we go. Yeah, Walmart is WMT. And there's two actually here, but I want the publicly traded one. So if I did WMT, it would jump to it. Okay. So I'm going to go ahead and click on WMT or Walmart. Now, one of the tricks here, when you go in, I can actually get the 10K annual report here and read through it, but I want to go to the classic version because there's some shortcuts associated with that. So one of the tricks when you go here, you're going to go into the classic version. We'll do this again on Saturday, but I just want to introduce it to you as we go. And now you're going to see the filings with the SEC. If a major stockholder or board member is selling stock, or a C-suite chief executive officer might be selling stock, they need to make filings. If there are major changes coming up, if they're laying off folks, they need to do filings. There's 8Ks, there's 10Qs, quarterlies, 10Ks. And I don't even know what all of them mean either, but I know enough to say, I want a 10K on the filing type. When I click 10K, it says, sorry, there's no such thing as a 10K. The syntax is very important. If you type 10K, it's not going to show anything. If you type 10-K, there we go. You get a whole bunch of 10Ks. So I could go to the documents themselves, which you'll have a text file or a PDF, but I'm going to go to interactive data. This is the most recent one, 22 filing, and I'm going to go through. And as I go through, and I take a look, I have my financial statements. I have the 10K, I have notes to financial statements, accounting policies, all kinds of good stuff. I want to jump to the financial statements. This is where I'm going to be able to calculate and find the income statement, find the balance sheet. And I will make a point here. Which of these is my income statement? Statement of income or statement of comprehensive income? Answer is?
It depends.
It depends. Good answer. Okay, next question. It depends on what? Well, I'll actually answer that question at this point, since most of you haven't done the homework yet, and that's okay. Comprehensive income goes beyond your income statement, your revenue expenses, and you'll see more of that. Comprehensive income includes things that are not yet recognizable. Let's say you bought stock and the stock value went up like crazy, and you're supposed to be recording stock at historical costs, and until you sell it, you don't recognize the profit. But if the stock went up, or you have options, or you have other things going on, foreign currency fluctuations that you have gains from, these are all things that are showing up in something called comprehensive income. We'll explain that another time, but just be aware the income statement that we're working with is a statement of income, sometimes called the statement of earnings, sometimes called a profit and loss statement. They do that, I think, to confuse students or to justify why the accountants make the big bucks. But the terms they use, they're all the same thing. If it has revenues and expenses, it's an income statement. If I go to the statement of comprehensive income, I'm not seeing revenues and expenses. I'm seeing a whole bunch of gobbledygook. Yeah, I see starts with net income, but that should be the end of an income statement, I thought. Other comprehensive loss, translation, investment hedges, cash flow hedges. This is kind of funky, but that's comprehensive income. We're not going to worry about that. If I go to my income statement, oh, there we go. Starts with revenue, net sales, membership, total revenues. Where does Walmart have membership revenue? Anybody a member of Walmart? Anybody know?
Sam's Club.
You bet. Sam's Club membership. Mine's renewable in 3 weeks. They reminded me 6 times the last time I was there. So, but that's their income sources. Cost and expensive, cost of sales, also known as cost of goods sold, also known as cost of products sold, COGS, costs, all the same. That's the stuff they sold. SG&A, selling general administrative expenses, on down to interest, other stuff. We get to a bottom line, which bottom line in net income is right before the earnings per share. So here's their bottom line, $13,673. Anybody think Walmart had $13,673 of net income? I don't think so. I think they had a little bit more than that. Yep, there we go. It's in millions. So Walmart had 13,673 million, or $13.7 billion of profit. They did not have $567,000 in sales. They had $567 billion in sales. That's $500 billion in net sales. With membership fees, they're at $572 billion. So $500 billion, over $500 billion. So be careful the numbers. They're going to be millions, billions, sometimes they're just in dollars, depending on the state financial. Can somebody take out their calculator and do me the favor of calculating the net income percentage? I'm going to ask you to take the net income of 13,673 and divide by 567,762. Can someone pop that in the chat for me? Type in the chat what you get when you do a calculation like that. All right, so I get a chat. We get 2.4%. Thank you. Oh, wow, you guys are quick on the draw. Thank you so much. 2.4%. So for every dollar of sales, they put 2.4 cents in their pocket. Which means for $2 sales, for a $2 gallon of milk, how much they put in their pocket? What's double 2.4 cents? Hopefully not a tough question.
4.8.
Thank you. Less than a nickel for that $2 gallon of milk on average. Okay. And I'm saying it depends is a legitimate answer in our conversation. I'm going to go back here, and instead of going to financial statements, I'm going to do a shortcut. And this is something you're going to end up doing when you do your projects. I'm going to view an Excel document. And my Excel document is going to get loaded over here. I'm going to open it up. It's going to have a bunch of tabs on it. And there we go. I'm going to enable editing. And you'll notice the tabs at the bottom. I've got a cover page. Here's my Walmart, Delaware Corporation. I've got audit information. I used to work for EY, Ernst & Young, but when I was there, it was Arthur Young. They were part of the Big 8. Now they're part of the Big 4 with all the mergers going on. They're Arkansas, Rogers, Arkansas, as opposed to Bentonville. Okay. They have a year end of January 31st, fiscal year end. But that's interesting, but not what we're looking for. We're looking for the income statement. Here's our income statement. Oh, there it is. Revenue, $567 billion. Total $572,754 billion. So I'm going to go through and make a calculation. And I'm going to go through, I'm going to insert a row column here. Go ahead and make that my 100% number. That slash that. I'm going to make that just column percentage. Give that extra decimal point for kicks. I'm going to actually edit that. Absolute referencing, because you can type it in from even that laptop keyboard. I'm going to copy this formula down. All the way down here. Stop before the net income, the earnings per share, basic net earnings per share. And you are so right, 2.4% is a great number. Now notice here, my cost of sales, I've got a 75.6% number. If I take my net sales, my revenues minus my cost of goods sold, there goes profit. I'm going to insert a row there. Take this, that, that, and copy this formula down. So in theory, for every dollar of sales, my cost of goods sold is 75 cents, 75.6 cents. And my gross profit from that happens to be 24 cents. So if you were in that, if you answered that 50 cent, 25 to 50 cent range, because $2 would be 48 cents, 49, 48.8. So you would have been correct if it was gross profit. That's how much they put in their pocket based on the cost of the stuff they sold. On average, the cost of the gallon of milk. So 3/4 of that, they paid $1.50 for the milk and 50 cents they keep to pay for their other stuff, like SG&A, which is 20.8 cents. Okay, then an operating income is a little higher, but the net income down here. Now, if you want to go through and say, oh, that didn't look so bad, I can go in here. I'm going to add a column here. I'm going to go ahead and copy that formula over here. This time I got to change that to D and copy it down. And if I copy that down, you'll see that very similar, 2.4 cents. Net income percentage. For every dollar of sales, they keep 2.4. They had a little bit higher cost of goods sold. So 75.7. And let's do the final column because this is actually going to change our bottom line answer. We'll see. And change that formula to F. Do with function keys, but on my laptop, my function keys don't want to cooperate as much. So if we look at what they did 2 years ago, the answer would now be 5.8 cents. So it would be over a nickel. But you start saying big bad Walmart, they're only making on average 2.4 cents for every dollar of sales, where Apple's making 25, 30 cents. Banks do pretty well. Harley Davidson might be 10 cents. ExxonMobil's been doing a lot better lately, but they're typically 7 or 8 cents. Restaurants are typically 7 cents for a franchise, 5 cents for a privately owned. You say 2.4%, that ain't much. If I tell you it's actually $13.7 billion, that's a lot of money. So that is the brief overview. And we're going to do some more practicing on Saturday with this stuff and go through an income statement and balance sheet and try some of that stuff. Quick show of hands. How many is this stuff making sense to? Are we on the same page? How many feel that the Excel that I did wasn't too fancy and feel okay in the Excel that we processed? Okay, good. I'm going to urge you, there's some tutorials on Excel, including something called Ben and Boz. Chico, if you want to mute.
Yeah, absolutely. Okay. I just have a thing that I'm.
As far as being able to do this kind of stuff, again, this video will be replayable. It's being recorded. You'll have access to it. I'll post it tonight if you do want to review. Nothing fancy, but you can see how you could very quickly get some numbers, get some analysis with Excel. Because if I asked you to take out your calculator, please, or take out your phone, can you sort of punch some numbers and make some calculations? And we did that. The first calculation we did by hand. But if we wanted to do all 3 years, we wanted to see gross profit as well as net profit. And if we wanted to do some ratio analysis of combining things, so much easier in Excel. So I did want to demonstrate the power of Excel to you as well it's one of those tools, even if you're not an accountant, you're going to want to get comfortable with. I'll give you an example of an interview question. One of my colleagues at a previous school, the marketing program director, when he was interviewing candidates, he was head of Smuckers for Australia and Oceania and Asia. One of his interview questions was, okay, I'm selling an item for an item cost me $60 to make. I have 15% markup. How much am I going to sell that item? Seeing a marketing guy is asking this question. Yeah, it sounds like an accounting question, but it's marketing too, because marketing do budgets, use accounting. So what's 15% of $60? 10% is 6, another 5% is $3 more, so that's 9. So 15% would be $9. With 15% markup, you go from 60 to 69. He would expect you to do that in your head, or he wouldn't hire you. And this is a marketing guy. So accounting is powerful in any discipline, is useful across the board. We'll talk more about data analytics. That's a boom field and the analysis that goes with that. We'll talk about data visualization with Tableau and Power BI. These are some of the tools that are being actively used, and accounting is leveling up. Accounting, and there's a difference, you see a video, bookkeeping versus accounting. It used to be ticking and tying, doing receivables, payables, payroll. Accounting is more decision-making. It's a language, and you will be comfortable with that language by the end of this class. The terminology, the ability to understand. Once you get that language in flow, you'll be able to better process, predict, analyze, and review for other things. So that's the demonstration on the income statement, and I want to make sure you all at least could see an income statement and were reasonably comfortable saying, okay, yeah, revenues, expenses, that must be an income statement. I got gross profit, I got net profit. These are all terms that you, if not already comfortable with, will be comfortable. I'm going to jump over to the balance sheet in a couple of minutes, but I want to open the floor to other questions you might have so far. Anything on your mind? Let me do a quick look at, switch over to Blackboard just for a minute, because I do want to go in and mention some of the other things that are on there. So let's go ahead and I'm going to share screen, go over to Blackboard, and you'll see here, yep, we have the start here, the welcome, and our syllabus. And the syllabus has all kinds of information. I'm going to urge you to read through it. That's basically our contract. That's basically our agreement. That's basically expectations. Also has the grading standards in there, and I'm not going to review them now. Anything with an asterisk, I did have a little footnote down here. An asterisk means most frequently used. So you'll see those are the things that you'll probably be jumping to on a regular basis. You might jump to the calendar, which has recorded the obligations that the discussion assignments do, which is one set of assignments, and the homework, which is another. And then we have the accounting analytics course itself. This is kind of a gross, big picture dashboard that you can use. It's a Blackboard dashboard. Announcements, all the emails I've sent are found on the announcements. Schedule for Saturdays is found on the announcements. Zoom for class access, you made it here. Congratulations, found the password. I'll be recording some lectures. I'll be reporting Wednesday night recordings there as well. PowerPoints. One way to study is, and I'll pop in there just for a minute. All the PowerPoints for all the chapters can be found here. And they're called modules, not chapters in Cambridge Research. But a good way to study, because terminology and the language of business is accounting. Some of these terms you may be quite familiar with, and many you may have no idea. But the key is repetitive exposure. The more you read the terms, the more you see the terms. It's like marketing. You see the billboard, you see the YouTube ad, you see a TV ad maybe. In the supermarket, you see packaging, whatever it is. It'll be 6 to 10 times before you really start registering some of these things and understanding. The same thing goes for the terminology associated with this class and with accounting in general. So a good way to study might be to start with a PowerPoint. Review the PowerPoint. Take a look and get the gist of what they're going in the direction of where things are going. And then go ahead and do the readings, work the homework. And as a capstone, go ahead and review the PowerPoints again. You better have a better understanding. And that's the dream and the hope. But chances are you will, because you, again, having that extra exposure is pretty powerful. I will scroll down through here. We're going to assign this Saturday mini groups or cohorts, as I said in the mail I sent you, in the email, as well as the announcements. You can check your grades right here. There are some other tools built in, and there's some technical things about uploading a photo, using discussion boards if you're not familiar, lockdown browser info. By the way, you've got a free Wall Street Journal subscription access through here, and you have free Microsoft access. You can download to your tablet, you can download to your laptop, Apple or PC, Windows or Windows-based, and you can do it on multiple computers. It's 3 computer limit. But you have office.com, which you can have access to that in the cloud, but you also have it locally. And the calendars are shared, everything is shared and accessible through that. Grammar tips and tricks. This is an accounting course, but it's also communication is key. And there's something called Grammarly that I recommend you use. It's a great tool. I use it often before I send out even the emails I send to you guys. I'll run through Grammarly. I'm actually, I've got my doctorate 3 years ago. I'm actually pretty good with English, native English speaker, but I screw up too. And I miss things, and it helps really to highlight and catches things. It's not perfect. It's not foolproof, but it is a great boon before you send out communication, especially to a boss or for professional use. Some more free resources, subscription services that are free. Discussion posts. So you'll be using discussions a lot. And then the module assignments here, all the textbook assignments are through here. And then there's a section with quizzes and exams separate. And then there's some other stuff which we don't have to worry about. I wanted to give you a mini tour, walk you through, make sure you're comfortable. Other comments or questions? Any Blackboard questions? Any general accounting questions? How many were any accounting major? I know a couple of you were accounting majors, undergrad, accounting and possibly finance. How many no real business exposure except for 605 summer class? Okay, so a couple. All right, and a couple that weren't here may be in the same boat. And that's okay. We'll carry you through. It does take some work, and it's going to take some effort, and you will succeed. That's why we're here to help you succeed. Anything I can do to help, that's my job. And as I've said in communications, I say, if you have a problem at 2 a.m., you can call me. Really? I'm going to wake you up? No, you're not, because my phone's in the office. It's on the charger. When I go to bed, I sleep with my wife, not my phone. Okay, so it's going to stay in my office, and if I'm there at 2 in the morning, I very well may pick it up and answer it. And I've had students shocked when I have and said, I thought I was going to get your voicemail. And I say, okay, I'll hang up. You can go back to voicemail if you want. But actually, we end up talking usually. But if you have a question 11 o'clock at night, if you're stuck somewhere, feel free to reach out. Again, if I'm sleeping, you won't be disturbing me. If I'm up, I'm happy to chat, happy to talk, make it work. So please use me, abuse me, take advantage. I'm here to serve you and make it work. All right, so let's get over to the balance sheet. I officially have 20 minutes. By the way, this call officially lasts an hour. And I'll have a topic each week. But if we need to go to 7:38, we need to do additional time at your service. We'll make, again, here to fit your schedule, to fit your needs. All right, how many have a reasonable comfort level with the balance sheet? Let's do a quick show of hands again. Balance sheet kind of makes sense. Okay, I know why it's called a balance sheet. My assets equals liabilities plus equity. And I'm actually going to go into a share screen mode right now and do a whiteboard so that we're going to do a little bit of a tour. And I'm going to draw the master T account. And here we have assets, liabilities, and equity. And the key is a formula that we're going to be using. Assets equals liabilities plus equity, which is why it's called the balance sheet. Always has to stay in balance. Them's the rules. Assets are the things we own, pretty much. We have things like cash. Anything we can turn to cash. Inventory, we're going to sell it. Equipment, we could sell it. Things we own versus liabilities or obligations or things we owe. So we borrow some money from a bank. We get a mortgage on a piece of property. Whether it's secured or not, the mortgage is a debt, is a loan, bonds payable. And then we have equity, and this is the ownership interest. And what happens is we've got this asset equal liability equation, but we also can rearrange that a little bit. We can say assets minus liabilities equals equity. We can say assets minus equity equals liabilities. Or we can always say assets equals liabilities plus equity. So let's go through a couple of transactions and see what happens when we do this. Let's say we go out in the marketplace and say, you're starting a business and you approach your uncle, your aunt, your mom, dad, your peers, or your classmates and say, I need 50 grand. If you want to help me with some 50 grand here, I'm going to put in 50, you're going to put in 50. So we're going to have 100 grand here. So I'm going to go ahead and put 100 grand on my balance sheet. There's 100 grand of equity. I'll call it common stock, owner's equity, whatever you want to call it. To balance this, well, where did the money go? Well, it came in as cash. So I'm going to have cash coming in the door of $100,000. Okay. Am I in balance? Let's see, my assets are 100, my liabilities are 0, my equity is 100. I'm in balance. We're good to go. 100 equals 100. Okay, that's why we're in balance. Now I may go buy some inventory. So let's buy $75,000 worth of inventory. And how do we pay for it? Well, let's start with, we'll use cash to pay for it. So what happens to my cash? Well, my cash is going to go down to what? Anybody? Please.
25.
Thank you. Good answer. $25,000. Now let's go to the balance sheet for a minute. I mean, the income statement. I'm going to ask you the question. I've got revenues, I've got expenses. I just bought $75,000 worth of inventory. How much in expenses do I have? Now, this might get a little bit heavier. If you've had some background, everybody should be able to answer the question, because in the picture here, how much do I have in assets? What did I have? $100,000. What do I have in equity? $100,000. What do I have in liabilities? Zip. What do I have in revenue so far? Not 100,000. What's my revenue right now?
0.
0. What are my expenses right now?
75.
I knew that would come. Thank you, Jonathan. I do appreciate the participation. But what if you're looking at this picture, it can't be in two places at the same time. Would you like to revise your answer based on this picture? What do you
Dr.
think?
Scott.
Revenue is 0. What do you think expenses are?
0.
Bingo, 0. Wait a minute, but I spent $75,000. How about if I bought a vehicle? I picked up a used car. Okay, I got a vehicle, got a car for 10 grand. And I'm gonna take out a loan. Okay, I'm gonna have a note payable or car loan, 10 grand. So what happened here? Did I have 10,000 expenses? No, I've got 10,000 in asset. In theory, I can sell that car for 10 grand. Right? I still have 0 in expenses. I have 0 in revenues. We're going to be talking about GAAP accounting, generally accepted accounting principles. GAAP accounting says I do not match my expenses. I match my expenses with my revenue when I incur the revenue. So if I sell inventory $10,000 worth of inventory for 20 grand, I'm gonna move 10,000 out of 75, put it here. I'm gonna get 20 in revenue, and I'm gonna have 10,000 in profit. And we'll see where that profit goes in a minute. In the chat. So my screen is showing black. Let me see. Is that anybody else having the same problem? I think that's because I have my.
No, it's pretty straightforward what you were typing up earlier.
Let's get this out of the way. Sometimes when I have the pictures and the screen with Zoom, it kind of blackouts, blocks some of the stuff. Okay. All right, so if we're looking at what we've done so far, so let's go ahead and let's say we do some consulting services. And I do $20,000 in consulting service. We started a business and someone's paying us just to come talk to them. We're gonna be like the president comes to speak, he or she will make $20,000 out of the gate. So we're gonna make a $20,000 profit here, or 20,000 in revenue, well, speaking revenue. And I have 0 expenses so far. So what's my net income? Well, if I have 0 in expenses, I'm gonna have $20,000 in net income. I just do simple calculation. Revenue minus expenses equals 20. So my cash just went up to $45,000. Well, let's make it receivable. So we didn't get paid yet. You owe me the money. You owe us the money. We started the business. We got 20,000. It says my balance sheet and balance. Let's do the math here. What's 25, 20, 75, and 10?
$130.
You get 130. I do too. Good answer. What's 110 here? Well, my liabilities is what? 10,000. Notes payable. My equity is 100,000. What do I get?
$110.
Thank you. 110, not higher level math. By the way, accounting, you don't have to be good at math. If you know 4-function math, if you can add, subtract, multiply, and divide, you can do accounting. That's where most of it's going to be at. You say, Scott, you just lied to me. I don't like to lie. Assets equal liability plus equity. Why am I out of balance? I got 130,000 here, and I got 110 here. Well, there's something happening in an area called retained earnings. Again, if you've seen this before, you'll probably know what this means.
Mhm.
You have beginning retained earnings plus net income minus dividends is ending retained earnings. So my beginning retained earnings, I'm going to put my retained earnings over here in equity. Started out at 0. I add my net income of what?
20.
20,000. Did I pay any dividends back to the owners?
No.
Zip. What's my ending retained earnings? Better be 20,000. My balance now? Feel better? I feel better. Do you feel better? So now I have total liabilities and equity. $130. Okay, I'm not a liar anymore. As soon as you have a sale and move things down, let's sell some inventory. Let's get real fancy. I'm going to sell $50,000 worth of inventory for $100,000. Okay. So I'm going to get sales of $100,000, product sales. And I told you I was going to sell $50,000 worth of inventory. So my cost to get sold is 50,000. So now what's my total net income? It's no longer 20. I've got 100 in product sales, 100K. I've got 20,000 in speaking revenue, 120. I take away 50. What's 120 minus 50? Yeah, not higher level math. Anybody?
70.
70.
Yeah, 70,000. Good answer. Thank you. And now my inventory is no longer 75. My inventory goes down, sorry. Where did my inventory go down to? I
25.
sold 50,000 worth of inventory,
25.
goes down to 25,000. And I had 100,000 revenue. Let's make it as a receivable. Okay, so I'm gonna go ahead and I didn't get the cash yet. Because cash is king and queen, by the way. But right now, if we add $100,000 to our receivable, how much do we have in receivables? We already had 20 from the speaking revenue, hasn't been paid yet. Should be 120,000, right? Am I going too fast for anybody? Are we making sense? Are we on the same page?
Is this why Excel is handy?
What's that?
Is this why Excel is handy?
That's why Excel is amazingly handy. Thank you. Good idea, Chris. So I'm looking at this and I say, do my total assets equal liability plus equity? Well, if I change my retained earnings, what's my retained earnings right now? Beginning retained earnings 0. My net income is 70. My dividends are 0. My ending retained earnings better be 70. So I'm going to change this to 70. And my total assets, my 100 plus my 70 plus my 10, my 180 better equal my 180 here. Did that right? I've got 120 plus 50 is 170 plus 10 for my car loan. I've got 180 there. I'm in balance. So again, our balance sheet's in balance. Life is good. But as soon as I sold something, I had revenues and I had cost of goods sold. The one variation is if I had payroll, if you guys were all working for this company and we had a payroll expense, you said, well, the payroll I need to match not to the sale of $100,000 or 20, I match it to the period. So period stuff like utilities is going to get recorded right away as selling general administrator. Other stuff in the balance sheet is going to get recorded, in the income statement. Other expenses will get recorded right away. Eventually, I'll move this car, I'll expense it through something called depreciation and have depreciation expense on the income statement. So these are the things I own. These are the things I owe. I'll actually pay some interest eventually. I have some interest expense. My cash will go down and my interest expense will go up, but it will reduce my net income. So when my cash goes down, my equity goes down because my retained earnings goes down because of the interest expense. For some of you that have never seen this before, you are now blurry-eyed. You might be crying, but I can't see that across Zoom. But this will come together the more you practice. I did the marathon. I did a very quick bird's eye view. Let's do some transactions. Let's go into business together and let's see how it shows up on a balance sheet and on an income statement. Again, this is being recorded. You will have access to. So let's go take a look at the balance sheet for Walmart. Okay. So I'm going to go ahead and cut out. I'm going to do a new share. And I'm going to go through. Let's go over to our Excel spreadsheet. And we have audit information, statement of income, statement of comprehensive income with funky stuff on it, cash flow hedges, pension liability. I'm not going to worry about that right now. Here's my balance sheet. What's my total assets? $244.86 billion. It's $250 billion. What's my total liabilities plus equity? Better be the same. How about last year? We actually had more assets last year. January 31, 2021. 252,496 went down a little bit. So what happened? Our cash went up, we got 17.7, I'm sorry, down $14.7 billion in cash. We also have more receivables. People owe us money. That's not a good effect on cash flow. We're loaning people money. But it is what it is. Our inventory is way up. Our inventory is up 25%. A lot of stuff sitting on the shelf. Our prepaids are way down. Prepaid. Oh, wait a minute. This says the word expenses. Isn't that in my income statement? No, I can't move prepaid expenses until they're executed. If I bought plane tickets or concert tickets, they'd be an asset because I could sell those, turn it to cash. But once the plane land or the concert happens, they get expensed. They get moved from prepaid expenses to actual expenses. There's a separate category for current assets. 1 year, we'll talk more about that when we get there. PP&E, property, plant, and equipment. We're talking about buildings, machines. Walmart owns a lot of property. And then we have operating lease, right of use assets. This was new GAAP, generally accepted accounting principles. Before we could lease equipment, we didn't have to put an asset here. We just had lease expense on our income statement every time we wrote a check. That was a little bit deceptive. So we now have lease counting that we have to record an asset and record the lease obligation because we want it to show on a balance sheet. If you're buying a company and they're leasing 10 vehicles, you're going to want to see that as an obligation for the next 3 years or 5 years, or however long the lease is. And if it's just being deducted as expense every month, you don't see it. But if you see it in the balance sheet as right of use assets, including a 10-year or 20-year property lease, that's going to be showing up on the balance sheet. Finance lease, right of use assets. Goodwill you get when you buy another business. It's what you overpay over the fair market value. We'll see those terms. The long-term assets, total assets. Then we get the things we owe. Short-term borrowings. Could be a 90-day note. Could be a bank line of credit. Accounts payable. Accrued liabilities. Income taxes. Accrued. Estimated. By the way, the word accrued means estimated. I didn't get a bill for it, but I'm estimating that we did a trade show last month and I haven't got all the receipts in yet to reimburse my employees, but I'm going to estimate some. Better to put something there than nothing. Current maturities of long-term debt, something to do within 1 year. These are operating lease obligations. How much are we going to have to pay on that lease? Eventually, finance lease, total current liabilities, long-term debt like bonds payable, long-term operating lease obligations, financing, deferred income taxes, commitments and contingencies, finally down to equity. Here's our initial investment. Issue at par, common stock, and capital excess of par. And here's our retained earnings. Remember we had that? Changing instantly when we had a sale. Changing instantly when we had an expense. AOCI, other comprehensive, that's part of comprehensive income, comprehensive loss stuff. Total Walmart equity. We're worried about total equity of non-controlling and controlling interest, total of 87 billion, 91 billion now. And then our total liabilities and equity equals our total assets. Better. Notice I do not have something called total liabilities here. I have total current liabilities, but to calculate total liabilities, like if you have a debt to asset ratio, I'm going to have to take the sum of a bunch of things. I'm just going to do a quick formula here. And sum. Sum our current liabilities. Let's see. Total current liabilities plus all our other liabilities, and with that, there we go. So I've got 152. I do have total equity. I'm 91. I total these two numbers, it better equal 244. So I'm going to do a quick debt to asset ratio. Equals that slash. I can either use either the total assets or the total liabilities plus equity. And when I calculate that out, and I decide it's going to be a percentage, No. I am the percentage of debt of this company is 60, let's get small, 62.5% debt. And the percentage of equity okay, so we'll do that. So bottom line, I better be 100%. My total liabilities plus my total equity. I've got a little under 2/3 in debt and a little over 1/3 in equity. So that's my debt to asset ratio. How much am I financing and how much is from outside investors? We'll talk about risk later on. We'll talk about some concepts that go with this. But again, you can very quickly do, I'm going to go ahead and copy this formula over. How did we do last year? Why did it not? Oh, because I don't have codes here. So last year at 65, we were closer to 2/3. We have a little less debt and a little more equity. You don't have to know what those numbers mean right now, but just realize we're going to be doing some ratio analysis. We're going to do some calculations, some financial analysis. And the course covers both financial accounting, which is financial statements, historical, and managerial accounting or decision-making accounting, which is internal use. And financial, monthly, quarterly, annual statements, balance sheet, income statement, cash flow statement, where internal is ad hoc, as you need them, don't make decisions. That's where we're at. We're right on, well, I'm keeping you over 3 minutes, but I'll stay as long as you want me to. But I wanted to get an idea of how many found this helpful. I won't say interesting, but at least helpful as far as we went. Okay. Again, be aware, you can play this back. I'll be putting it on recordings. And every week we'll get together, ideally to answer your questions. You'll come in saying, Dr. Scott, help me here. I'm trying to figure this out, trying to make sense. On the other hand, you might be coming saying this makes total sense, but a couple of tweaks, a couple of other things, or some logistics on how we're doing things. Any other questions for tonight? Before I set you free.
You did say you were gonna post about the quizzes you said, so for sure you would post a deadline thing or?
Now the quizzes will be due Tuesday and it'll be posted by Sunday typically.
Okay. I looked through the syllabus and I was like making sure that, you know.
No, I appreciate, and I'm as concerned for your grades and for your ability to complete as you are. Well, you're probably more concerned than I am, but actually I'm pretty concerned too. So we'll make it happen. Anything else in your mind? And
Dr. Scott, can I have a few moments after everyone drops from the call, please?
Happy to do so. I will turn off the recording as well. I'm going to turn off the recording now, unless there's anything else, other questions that you think might be valuable for your classmates, who either couldn't make it or had to leave early. And I will cut